presentation of the assets of the IL&FS Group. Having said that, I will now take you straight to the presentation. The presentation, may I say, is brief, comprises only 5 slides, of which the first is a context setting slide, and the last is a summation or a recap slide. There are 3 slides in between, which are the heart of the presentation and which sharply focus on, one, the resolution, that is in terms of what we have accomplished so far, and what are the various modes of resolution that we are undertaking. And the second part is also, it has been broken up into various timelines. That is timelines in terms of, as was mentioned by Mr. Kotak, that is in terms of the what are the expected outcomes quarter-wise, starting from the current quarter and going on to not only the end of the current financial year, but even beyond. As you are all aware, the IL&FS board, the new board, took charge on the 4th of October 2018, consequent to an approval of the NCLAT made on the request of the Union of India. The new board, when it first met in early October, faced many daunting challenges. The first of it was the sheer size of the group. None of us had, in our wildest imaginations, expected that the group would involve 347 entities, and evenly spread both within the country and outside. The size of the debt as on October 2018 was a mammoth 1 lakh crore. There were at least 13 business verticals within the group. There was a multiple layered structure comprising of holding companies, intermediate holding companies, subsidiaries, SPVs, joint ventures with various state governments, with central public sector undertakings, and what have you. Its jurisdiction span across the globe, encompassing every continent except perhaps Australia. There was significant intra-group exposure, and with it, serious issues of asset liability mismatch. The board took some time to come to grips with the complexity of the environment, and began its efforts. And to share with you, in the last 21 months, the board has met 42 times, and each of these meetings has averaged about 8 hours in duration. So you could just get an idea of the kind of effort that has gone in, supported ably by the IL&FS team as well as the advisors. And through these meetings, the IL&FS board took control of the situation and tried to address the other challenges. The most important challenge that the group faced was that there were no precedents of a group level resolution, at least in India's corporate history. Therefore, the group had to also try and evolve a resolution framework which addressed the requirements of the group, basically trying to balance the interests of various stakeholders, that is, creditors, both the secured creditors, the unsecured creditors, the operational creditors, and others. So therefore, drawing up heavily upon the IBC and other corporate financial principles, the group, with support from the MCA, submitted to the NCLAT a resolution framework for the group. And that resolution framework went through several hearings, in which more than 150 petitions which were filed by various creditors were also heard. And finally, on the 12th of March 2020, the NCLAT approved the group resolution framework, which was proposed by the IL&FS and the MCA. The resolution framework is largely based on 3 pillars: resolution, recovery, and restructuring. In the subsequent slides, I explain these expressions. Also, because given the complexity of the entire exercise, to provide oversight for the resolution process, the NCLAT appointed a retired Supreme Court judge, and he has been ever since meticulously overseeing the resolution process. This has helped not only to increase transparency, help also the group, but also help the tribunals, both the NCLT and the NCLAT, who might otherwise not have had the time to go through the kind of issues in such great depth, as something which was facilitated by the examination first at the level of the retired Supreme Court judge. There were other issues. We had serious liquidity problems. There were large number of entities within the group who were not able to pay salaries, who were not able to even discharge statutory liabilities or meet their PF commitments. With the help of our advisors, our resolution advisors, we also took control over the liquidity management. And then, as you are aware, the new board came into being because the erstwhile board had been superseded on account of mismanagement. So obviously it resulted in the central investigative agencies getting into the act, the SFIO, the ED, the Delhi crime branch, and even the CBI started investigations, and and those investigations are continuing, they are ongoing, and we are required to extend support at all levels. We also at the IL&FS board level ordered the forensic audit of a number of group companies, basically to try and unearth instances of embezzlement, of frauds, and other misdemeanors. On the request of the union government, the NCLAT also ordered recasting of accounts of past 5 years in the case of the 3 largest of the entities. And this is also an ongoing exercise. Because we were largely acting for the creditors, therefore we had to engage closely with the creditors to get their buy-in for our resolution effort. Over 30 interactions have so far taken place, both in the formal committee of creditors meetings as well as outside. And also because the implosion of the IL&FS group, it resulted in a number of incomplete assets having to be closed, number of businesses having to be shut down. This resulted in both voluntarily as well as involuntary exits. And today the group is about 50% of its original size, with very large numbers of loss of manpower at critical levels. Next. This slide, I'll try and take you through what are the kinds of resolution modes that we undertook. After a lot of deliberation through several meetings of the board and also with the Ministry of Corporate Affairs, we resolved the following modes of resolution. The first row is the resolution which has, or the mode which has been followed, and the resolution which has already been accomplished. That is 23 domestic entities involving a debt of over 4,800 crores have been sold, and the monies have come in. These are largely the renewable assets as well as the GIFT City, which was a bilateral deal done with the government of Gujarat. Then there were 48 other offshore entities involving a debt of over 1,000 crores, which were sent to insolvency, and there the resolution the professionals have been appointed. So therefore, they have taken control of these offshore entities. Then the next set of resolution modes are ongoing. These are works in progress. The largest of them is the asset sale, which involves both sale of the entity as well as sale of the IL&FS stake in the entity. These involve 47 domestic entities carrying a total debt of over 13,000 crores and 10 offshore entities with a debt of almost 3,000 crores. Then the newest of the modes of resolution is the InvIT, which involves 13 domestic entities and addressing a debt of over 9,000 crores. Just to remind you, InvIT, the origins of InvIT lay in the public process that was run for the road assets. And that public process, while it resulted in bids being received for 10 of the 15 assets for which it was run. So in 5 assets, the IL&FS board took the view that the bids that were received were suboptimal. So therefore, those 5 assets and the other assets for which the bids were not received, and for 2 other assets for which, while the IL&FS board had recommended approval of those bid values, but subsequently one Italian bidder during the COVID was deeply impacted and therefore withdrew his offer, and one other is embroiled in litigation. So consequently, 12 entities, and with the 13th entity, which is the investment manager company of the InvIT, we are running the InvIT process. And the real estate piece, there are some companies of the IL&FS Group which are entirely real estate companies, but which involve a debt of a little over 470 crores. These assets, these companies are also to be sold, either the companies themselves or the assets underlying. Another major effort of resolution is the debt restructuring effort. This effort is currently on in case of 3 companies. The largest of them being the ITPCL, which is a power plant in Kadalur, Tamil Nadu, of 1200 megawatts, which is in an advanced stage of restructuring. The lenders have more or less granted their in-principle approval, but it is held up on account of one major issue, that is a very high level of receivables from the Tamil Nadu distribution company, a receivable of almost 2,500 crores, and only a substantial reduction of these receivables will enable this restructuring to go ahead. And we are currently waiting for the 90,000 crore package which has been announced by the Union Finance Minister to result in shoring up the fortunes of the Tamil Nadu government and the Tangentco in particular. And thereafter, once those amounts are received at the end of Tangentco or the Tamil Nadu government, and they are in turn passed on to the ITPCL, would it be possible to conclude this aspect of restructuring? There's another big company which is under restructuring, that is the IECCL, which is the EPC arm of the group, but that is in a relatively that is in a state, it is not yet ripe enough, as in the case of ITPCL. Another mode of resolution is the termination of projects, largely road projects, but 1 or 2 are other projects also. These projects have either been terminated on account of authority event of default or on account of default by the concessionaire. These involve 11 projects with a debt of over 6,000 crores. Happy to inform that in the case of 2 road projects, we have already settled the amounts and 400 crores of rupees have been received. And in the case of 3 other projects, we have achieved an agreement with the NHAI on the amount of settlement aggregating to over 2,000 crores. And also, to sanctify this agreement, the CCIE, which is a conciliation committee set up by the Ministry of Road Transport, has passed an order freezing the amount of 2,000 crores. But there are some other procedural requirements to be followed before we are able to also receive this amount. Then the largest in terms of number of entities is the mode of winding up. Though the debt there is minuscule, is only 278 crores, but here it involves a long process. This is where CIRP plus liquidation has to be invoked, but it's relatively less time consuming where it is voluntary liquidation. So this is also which we are also hoping to reduce the number of entities through this mode. Then there is one curious case of an insolvency involving an overseas entity called IL&FS, which is a Spanish-based company of the group. Here, one of the creditors, a Spanish creditors of the group, has taken the group to insolvency in Spain in a Spanish court, and we have received notices. And we have the IL&FS board has resolved not to challenge this insolvency filing. So therefore, and we have filed our reply, and we expect in the next date of hearing that this insolvency process would be taken to its next stage with the appointment of resolution professionals. Thereafter, the 100 offshore entities shown would also go under the resolution professional, his ambit. Finally, the largest in terms of debt, that is the 6 holding companies which account for almost 51,000 crore of debt. These, as we had planned, the resolution of this group would take place after the resolution of the underlying entities. And right now, while in the case of all the other entities that I have mentioned earlier, we have carried out this exercise in granular detail, and we have for each of the entities we have specific details in terms of what is the expected outcome, by what date that outcome is likely to be achieved. In this case, we are yet to work out the granular details, but suffice to say at this stage that we expect that by the resolution for this group or these holding companies would be by way of disbursement of the cash which will be upstreamed from the resolution of the underlying entities. Next. This slide essentially shows you what has been accomplished so far in this journey of resolution, as I had mentioned, of the 94,000 crores of fund-based debt and 5,000 crores of non-fund-based debt. We have so far addressed fund-based debt of about 7,500 crores and non-fund-based debt of about 1,500 crores. And the mechanisms through which this debt has been addressed are: we have sold entities, as I mentioned, the 7 renewable entities, the wind assets, and the GIFT City, which has yielded revenues of 4,800 odd crores. We have also, there are about 17 green entities within the IL&FS Group, which have been continuously servicing their debt. This includes 3 amber entities, which with the IL&FS board, with the help of the advisors and the team members, has converted them into green assets, which too have been continuously servicing debt ever since. So this is an amount of another 1,000 odd crores. Then you are aware that in the early stages, that a lot of non-green assets, many of the creditors had been automatically debiting our accounts, and this amount is an amount of over 1,600 crores. So this debt is also being discharged, so therefore, but this has now more or less come to a close with orders of the NCLT as well as orders of Justice Jain. We have a cash balance of over 88,600 crores, and we have also succeeded in getting, particularly in the IECCL, our EPC arm, a number of our non-fund-based limits released. So together, this account amounts to about 17,000 odd crores, or roughly 18% of the total debt of roughly 1 lakh crore. Next. This is a very important slide, which will show you, in fact, perhaps the most important slide which we wanted to share with you today. Here, I'll just explain the format of this slide. One is, of course, the various resolution modes which are featured in the first column. Then in the next columns, we take you through what is the number, what is the debt which is likely to be addressed, and in which quarter. And we have done this exercise in great detail for each quarter, starting this quarter and taking you through the next 3 quarters of the current financial year, and then beyond the next financial year. So therefore, I would like to take you through this slide in a little greater detail. In by sale of entities, and this is what going forward, what we have already accomplished was that 17.5. Now this slide only focuses on the efforts going forward. That is what we are seeking to achieve in the coming months. So by sale of entities, we expect to address about 13,500 crore of debt. This is split over 4 quarters, about 3 quarters, and some of it going into the next financial year. In InvIT, we are expecting to undertake the resolution of the debt in 2 phases. The first phase ending the quarter on 31st December, and the second phase ends in the quarter ending March 2021. That will take care of debt of about 11,200 crores. Here I would just like to mention that it is in InvIT, though we started late, but we are today happily placed where later today, we are expecting our in-principle approval from SEBI, as well as exemption for relaxation for a number of exemptions that we have sought from SEBI. Then is the mode of claim resolution. We have been engaging with the NHAI and with the other state governments, etc., to settle various claims. And here we believe that we would be able to settle claims of over 5,600 crores, and this would be done 3,100 in the current financial year and about 2,500 beyond 31st March 2021. through asset sales, that is the sale of the assets of the real estate assets of the IL&FS Group, we expect to achieve address debt of about 900 crores in the quarter ending March 21 and about 1,200 crores in the quarter ending March 21. So sorry, beyond March 21. That way, an aggregate of 2,100 crores. By way of restructuring of debt, largely through the ITPCL I mentioned earlier, which we are targeting to achieve within the current financial year, subject to receivables from Tangentco. That is the only condition. If that is met, we should be able to restructure this debt of 4,300 crores by September this year, and another 650 crores beyond March of the next financial year. In terms of the loan recoveries under IFIN, we are targeting about 200 crores in the quarter ending December, another 600 crores in the quarter ending March, another 1,450 crores beyond March. In this way, if you see, for each of the quarters, in the quarter ending September, we hope to achieve an outcome of 8,800 crores. Then in the quarter ending 18,000, in the quarter ending December 2020, we hope to cover a debt of 18,000 crores. In the quarter ending March 21, we achieved to settle debt of over 6,000 crores. And finally, in the period beyond March 21, we expect to resolve debt of over 6,600 crores. In this way, we expect to resolve debt of over 40,000 crores in the next 3 quarters and beyond. And if you add this 40,000 crores to the 1,700 odd crores, 17,500 crores that has already been resolved, we hope to achieve an outcome of over 57,000 crores at the end of the period of resolution. In terms of the number of entities, understandably, as we resolve the debt of the group by either sale of entities or extinguishment of the companies, we will also have reduced the number of entities in the group. We have now, from what we started was 347 entities. Then we moved to 302 entities very quickly. Today we are at 276 entities. At the end of the current quarter, by resolving the debt in 33 companies, we should be left with 243 companies. And in the next quarter, that is the quarter ending December, we hope to be able to reduce the number of entities by 155, leaving us with only 88 of the 347 entities we started with. And thereafter, in the quarter ending March, we expect to reduce the number of entities by a further 26, leaving us just with about 60 entities from the start of starting with 347 in the beginning. Next. So therefore, you will see that the settlement of over 50,000 crores of debt by March and between 55 to 60,000 crores of debt at the end of the resolution period, which will spill over into the next financial year. And this is being achieved, as I was mentioned, 17,000 crores already done. 15 entities, the resolution process is in a fairly advanced stage. And these entities involve a debt of over 8,500 crores. And in 12 of these entities, we have also received the approval of the Committee of Creditors. InvIT also, as I mentioned, the 13,000 crore of debt, which is being addressed through InvIT. In case of 3 SPVs, we have already restructured the debt, and this debt is about 5,000 crores. So these, after restructuring, as I mentioned earlier, these companies are already regularly repaying the debt, both principal and interest. Then there is a restructuring program, particularly under ITPCL, which when resolved at the end of the current quarter would settle a debt of over 4,900 crores. And finally, in terms of settlement of claims, as I mentioned, 400 crores has already come in. Another 2,000 crores is likely to come in the next quarter. With that, we would have substantially resolved our claims with the NHI. Now, towards the end, I would like to just give you an idea of what these numbers mean. What is the reference point? How should we view whether the efforts that have been made are optimal or suboptimal? For that, I would just like to briefly take you through the IBC. The published data for the IBC, which of course deals with company level resolution, shows a recovery to date of approximately 47%. And this 47% is also largely an account of three major resolutions that have occurred. One is the SR resolution, the Bhushan Steel resolution, and the JP Infra resolution. These three account for a resolution of 1 lakh crore of debt. And in these three, the recovery percentage has been as high as 80%. And if for a moment, if you were to take out these three, then this average of 47% would plunge well below that number. So it is our group level resolution of which we are committing ourselves today before you and through you to the public at large of 50,000 crores to be achieved, which means by the end of the current financial year, which added to the resolution already accomplished, resulting will take us to 57,000 crores or thereabouts, which will be roughly about 57-58% of the total outstanding debt of almost 1 lakh crores of both funded and non-funded. With that, I would also like to briefly also acknowledge the kind of effort that has been put in by the IL&FS board, ably led by our chairperson, Mr. Uday Kotak. The IL&FS team, which has been also toiling incessantly and over the last almost 21 months. Our advisors who have also relentlessly helped us in this effort. The MCA, which has, I think, which has been our friend, philosopher, and guide through this effort, through this long journey, and I genuinely mean this. This also, I think, the media deserves to be complimented, not only on account of having encouraged us by positive news from time to time, but also for having pulled us up by coming up with sharp and critical pieces from time to time, because these have also kept us vigilant, has prevented us from becoming complacent. With that, I would like to thank you all for the opportunity provided. Over to you, Sharad.
Yeah. Thank you, sir. I think it was a brief but very crisp presentation. So we'll now open the floor for question and answers. So we would request everybody to first stick to questions regarding IL&FS only and make them brief. So there is an option of raise your hand in Zoom, which will help us schedule the questions. So we have a first question from Mayur. So Mayur, you can go ahead.
Yeah, my question is relating to this the COVID pandemic and its impact on asset prices. So to what extent has the expected realization from the sale of assets come down, and to what extent has it delayed the whole resolution process? By
Mayur, thank you. Sharad, I'll take it.
Yes, sir.
Please.
Yeah. Okay, Mayur, thank you for the question. Let me just, first of all, give you the perspective. As you know, the COVID lockdown began on 24th of March. Our resolution and distribution framework was approved by NCLAT on 12th March 2020. And just to give you a sense of time, we had put in our first distribution framework into the NCLAT in January, February 2019. And at that stage, you are aware the IBC process was also evolving with reference to what is the resolution framework. We saw gyrations happen in many companies, including SR Steel, NCLAT judgment, going to the Supreme Court judgment. And the NCLAT approval of a resolution framework for us, therefore, took about 13 to 14 months because of the evolutionary process which India was going through at that stage. Therefore, March 12, 2020 was when we got the approval. And only post that were we in a position to start settling and resolving committed bids, including on roads. Unfortunately for us, thereafter, 24th March onwards, COVID lockdown happened, and basically we saw another major issue with reference to our ability to conclude and have timelines. If I have to look at where has it hurt, I think it has hurt. Say, for example, Rajan mentioned one of the committed sales was to a Italian company called PSR in context of Pune-Shulapur Road. It was a binding bid from the Italian company, and post-COVID, they decided to discontinue their engagement with that bid. As a result of which, we decided to put this PSRDCL. We have now decided to put it into the InvIT format. Second, it delayed. I think the other area where it has delayed in terms of timing is particularly the real estate pieces, which we would otherwise have moved faster, and that has taken longer. Third, it has taken longer time for getting approvals through the system, including whatever we need to put into the NCLT process, because of COVID, that process has certainly slowed down in terms of the overall resolution process. Therefore, it has in some ways delayed our progress, and I think real estate is where we will see some implication on the value realization, and a couple of roads where we believe that we actually had a existing bid being withdrawn. But we are chugging along, we are not giving up, and I believe that the whole roadmap put out by the IL&FS management and board is something we are deeply committed to. And as long as the regulatory process, the judicial process, and approval process in our system happens, we are hopeful of meeting the timelines which we have put out, Mayur, for full public disclosure.
Just to add, I think also the impact has been there has been some delay in InvIT on account of the fact that we need to also undertake certain studies we are required to visit some of these roads. Some of the technical studies have to be carried out, engineering studies have to be carried out. That has got delayed. The visits have got delayed. One, and two, even the toll revenues have been impacted. So estimation of toll revenues has been somewhat distorted. So that has to some extent had an impact. Also, our engagement with the bidders has also got a little extended on account of the fact that we have not really been able to engage with them on across the table. The exchanges through mails and going into to their investment committees, etc., has taken a little longer. And these meetings have also been impacted because of lockdowns in Europe and elsewhere. So therefore, there has been delay on that account also.
And one other area I will add to what Rajan said is recoveries in our NBFC subsidiary, which is IFIN, also have got delayed because of this.
So now we have the second question from Tanya. Tanya, go ahead. Tanya. Okay. So now we can, I think, come back to her. We have Saloni now. Saloni, can you?
Yeah, hi. Am I audible, Sharad?
Yeah.
Hi, good morning. Mr. Rajan, you said that the total value of debt that you will address is over 50,000 crores. So this is upwards of 50% recovery. How will the distribution work? As in, have you got the final clearance from the NCLAT on the distribution of this debt?
I think we explained, I mean, Mr. Kotak also mentioned, and I also mentioned that the NCLAT has already approved the new resolution framework for the IL&FS Group on the 12th of March 2020. So that resolution, that new resolution framework would then be the basis for distributing the proceeds. And the number is 50,000 crores to be achieved by the end of March, and 57,000 crores or more by the end of the resolution time period.
Will there be any company left in terms of going concern once the entire resolution is over?
I've indicated that as of now, we have visibility of 60 odd companies that will exist beyond March 2021. And at this point of time, we are not able to clearly indicate what will be the extent of further reduction. But as we go along, I think we would be able to refine our numbers and clearly come out with what will be the final numbers that will ultimately remain for in terms of either having to collect revenues which are coming in or for other reasons.
Okay, one final question. In terms of the recovery and stuff, you mentioned that you have been criticized as well for the longer timelines, that have been taken. It's almost 2 years now. October will be 2 years. Do you think that you will now be able to meet this timeline that you have set of March, the end of this fiscal year? Do you think you will be able to adhere to those timelines?
Two quick reactions. One, I think these timelines, if you actually see, if you compare it to the IBC process, IBC is of course only of 2016 vintage. But if you see, typically cases take more than 2 years under IBC, where the law is very clearly laid down. Number one. Number two, there have been cases like the SR case because of litigation, etc., which has taken even more than 4 years. One. Now, compared to that, our case, as we mentioned, that we are dealing with group level resolution for which there are no precedents. It's the first of its kind resolution, which has never been attempted before, for which there are no templates. There is no law. So it is all being done under 241-42 of the Companies Act. So therefore, we are having to charter uncharted territory, number one. And second is the resolution framework has come into place only on the 12th of March 2020. So therefore, it was not possible, even if you had taken any sale transaction, the distribution could not have taken place. Or in many cases, we would not have even able to receive approvals on till the resolution framework was put in place, for which I said that it took a long period of time, and through several hearings involving over 150 creditors filing petitions in the tribunal, ultimately leading to the approval of the resolution framework only as recently as March, and soon thereafter we were impacted by COVID. So if you look at it in that background and against the reference point of IBC, I don't think it has been a particularly slow process. Do I recognize that there's always scope for improvement, always scope for gathering greater momentum and speed.
Okay, thank you, sir.
Now, can I request Ritu to ask her question, please? Ritu from CNBC. Ritu? We'll come back to her. Rohan?
Hi.
Hi, Rohan.
Hi. So just a little two questions, a little clarity on the domestic road projects and Chongqing-Yuhe Expressway in China. You haven't alluded to that. With respect to the domestic road projects, how many now go into the InvIT? You said 9 earlier in October. And what happens to the project for which I assume it's Atlantia, which has withdrawn the offer for Pune-Sholapur? What happens to that project? And the approval is for what today later expected? That is for setting up the InvIT by SEBI. So that is on the domestic road projects. And on Chongqing-Yuhe, you had given a written response to HSBC in your reply to the Singapore High Court that requesting them to desist from their application because you expect the sale to conclude as it is in advanced stages. So an update on that. And once it happens, and whenever it happens, do you expect any kind of difficulties in repatriating the income, the proceeds from that sale in light of other non-business related developments that has happened since then, such as war and politics and all that? Thank you.
So,
Rajan.
In terms of road assets, we mentioned that why it has been split. The InvIT has been put into 2 phases, and in the second phase, there are those we mentioned about PSRDCL, which was initially in the sale process, but because of the late withdrawal of the bid by the Italian bidder, therefore we are no longer able to run a sale process. Therefore, it is brought into the second phase. Also in the second phase are the RIDCORE entities, RIDCORE phase 1, phase 2, and RIPL, on account of the fact that that is a 50-50 joint venture between the government of Rajasthan and the IL&FS. So we will have to basically settle the issue of the 50% equity with the government of Rajasthan, and whether they are willing to be bought out. And therefore, those negotiations are on. Only after those negotiations are concluded would we be then able to take this to InvIT. And also because of the sheer size of RITCOR, which is over 1,500 kilometers, and therefore the technical studies, the engineering studies, the revenue estimations, etc., revised revenue estimations, etc., would take long. Therefore, we do not want to hold up InvIT. Therefore, we put them into the second phase. So some of them are in the second phase, but we are absolutely on track. And so far as the assets are concerned, and we hope to be able to be ground InvIT the first phase before the end of the second quarter. I mean the next quarter, that is by December. Coming on to Chongqing, the Chongqing highway, there we are at a fairly advanced stage, but there has been some stalemate in the negotiations between the bidder, that is the Ping An, and the lenders to the project, that is the Bank of Baroda. And I think the negotiations are taking place in order to, there are three issues outstanding, and we are trying to nudge both parties to come to an agreement. And negotiations have been taking place almost on a daily basis. Even day before yesterday, I think our team engaged with Bank of Baroda, and we also have engaged day before yesterday with UBS and with Ping An. As of yesterday, also efforts are being made, and the chairman also stepped in, volunteered to if the engagement at our level with the Bank of Baroda does not come to fruition, to step it up. He would be only happy to step in to try and conclude these negotiations. If that happens, then we are well and truly home. So I think that is, we are in a penultimate stage in the crucial negotiations between the bidder and the creditors.
Now we have Tanya again. I think we'll just try and get her on.
Can you hear me now?
Yeah.
Okay. So one thing is about the resolution process. I think Saloni also brought this up, that it's been almost more than 2 years since the resolution started. So the last update you gave us, you said that in the next 6 months you would see the bulk of the 50% of the debt restructured, and now we're waiting for another 6 to 9 months. So what gives you confidence at this point that the new timeline will be met?
Can I on this one request Mr. Vijay Kumar, the Deputy Managing Director, to share his view on our board's confidence and the whole time management's confidence?
Tanya, when perhaps we could not get you initially when your name was called, in between some other speakers' questions were there, and Mr. Kotak and Mr. Rajan have explained this. This resolution framework has been approved in March 2020, and immediately thereafter COVID situation was there. So a lot of groundwork which was done had to be finalized after, in view of this resolution framework, and therefore you find that some time gap is there. And initially also this group resolution was one of its kind, first of its kind in India. So understanding so many entities, 347 entities spread across the globe, that took time. So all these have taken time, definitely, but every effort has been made, and now granular details are available entity-wise, where do we stand, and accordingly this timeline has been prepared. So board has a confidence after due deliberation that we will be able to meet this timeline, subject to some of the regulatory issues may come up or some of the litigations may take up. We cannot guarantee against that, but most probably keeping all the stakeholders satisfied, that is the effort of the board, we will be able to meet the timelines. Yes.
And there was some pressure from the government a few months earlier on hurrying up the resolution process. I understand that you're constantly in touch with the MCA about it. So what is the government's view of, the ahead?
See, Tanya.
Rajan, Vijay and Rajan, both I would.
Tanya, you see, from government side, always public interest is in view, that we should be always vigilant, we should be on toes and complete the process. But it's not hasten the process in a manner which is not acceptable to the stakeholders. We are here to take care of shareholders. We are here to take care of creditors, even small creditors at the last rung. And that's why this resolution framework takes care of those who were otherwise would have got nothing, like pension fund, army welfare fund, army widows, they have contributed for this entity. So everybody should be taken care of to the extent possible under the framework. Framework has been prepared in that sense. So I don't think the government is pressurizing to just wind up the things. And we are also working towards a fair and equitable distribution of sales proceeds, keeping the value of enterprise value of entities going as such, and realization should be maximized and public interest should be protected. So all these steps are there, not that just we want to wind up and therefore we can give you a date, kal kar denge. We are doing it in a way that preserves value, which is in public interest and which satisfies the requirement of all the stakeholders, their expectation to the best possible within a legal framework. That is our effort.
Rajan, you want to add?
I do acknowledge that we are under pressure from the government to accelerate the resolution process, but the government is equally cognizant of the constraints under which we have been operating. They are aware because it is the applications also filed for the for getting the new resolution framework approved in the NCLT is a joint filing, that of the government and we have been working together. I mean, very closely together, and it is government is cognizant of the fact that that we have taken why it has taken so long to get the resolution framework in place, and so therefore, and without that resolution framework, it would not have been we would not be able to go forward. And to tell you that despite the change of guard, the new secretary who has also joined has been closely reviewing he has taken stock, apprised himself of the issues with which the IL&FS Group is grappling in the resolution process. He has not only familiarized himself, but he is also overseeing this process very closely. And I think we are holding review meetings almost once every 2 weeks. I mean, we held a meeting about 2 weeks back. The next meeting is scheduled again on Saturday. The notices are already out. And I think we are working very closely, and he is quite content with the effort that has been put in. Though, of course, the pressure will always be on to play a catalytic role in accelerating this process.
I think next week we have Ritu. Again, we'll try her. Ritu, can you go ahead?
Sure, if you can hear me. Just a simple question. 57,000 crores of debt is what you expect to resolve by March 2021. Are we to assume that the remaining will be written off, or is it merely the timeline that you're trying to indicate by March 21, the amount that may be resolved?
Rajan?
There is what remains unresolved at the end of this period is the haircut that would have to be taken by the group of lenders, whether it is the secured, unsecured, or the operational creditors, as the case may be. So this, as I mentioned, that is so therefore, if we are and if we reach a figure of somewhere short of 60%, so that indicates that the balanced debt would remain unresolved, and that is not unsurprising, given the as I mentioned, as was mentioned at the very beginning, the very high gearing ratio, etc., where it is almost 17:1, and other factors. And this is still compares very favorably with the IBC process, which I had detailed in my presentation. I think that should suffice. If Mr. Kotak wishes to add on, he may kindly do so.
Ritu, one other point which we also need to keep in mind, that here was a holding company with 347 subsidiaries and associates. If the timeline which we have put out is achieved by IL&FS, from 347, if we come to around 60 companies by 31st March 2021, it is nearly 300 companies resolution in a period of around 2 years. So just look at the width and the depth of this entire group resolution process. I mean, I cannot think about a similar situation so far in India, where we had a group resolution for 300 plus companies happening under one roof. It is much, much easier to do a resolution of a single entity compared to a complex web of 347 companies. And if the IL&FS management and the board does achieve a number of around 60 odd companies by March 2021. That itself, in terms of sheer resolution and width and depth, in addition to the amount, is an important aspect we need to keep in mind.
So we go to the next question, Vikas.
Yeah, hello. Yeah, hello. Am I audible?
Yeah, you're audible, Vikas. Go ahead.
Yeah. So my question is regarding the TANGEDCO dues which are there, the receivables pending from TANGEDCO.
Can you speak a bit louder, Vikas?
Hello.
Yeah.
Yeah. So my question is regarding the TANGEDCO dues which are the receivables which are pending from them, which is also affecting our restructuring of the power plant that we have in Korea. So what we have noticed is, ever since the proposal had come from PFC and REC, we haven't seen any kind of states taking the loans from them. And so what is the expectation that we'll get this loans for the receivables from TANGEDCO and we'll resolve this restriction by September?
Rajan?
Just to update you, I think the kind of effort that has been going on, I have personally written to the Secretary, Ministry of Corporate Affairs, to take it up with the Ministry of Power. He in turn has not only written but also spoken to the Secretary, Ministry of Power. I have in turn spoken to the Additional Secretary, Ministry of Power, and I have been informed that there is a cabinet note under circulation which is likely to be approved in the next fortnight or so. Once that cabinet note is approved, then from out of the 90,000 crore package, amounts will start flowing into the respective state governments, including to Tamil Nadu. And once that happens, Tamil Nadu government would be in a position to release the dues of various generating companies, including the ITPCL Kadurur plant. Number one. Number two, just to inform you, there are units in Kadalur of 600 megawatts each. The first one has a PPA with the TANGEDCO, and second one has a PPA with the Power Trading Corporation. So the dues are on account of dues to us and PPP dues to us. And PPP has also withheld payment on account of the fact that they in turn have not been paid by the government of Tamil Nadu. So all roads lead to the government of Tamil Nadu, and the government of Tamil Nadu is currently not able to meet these, not only these receivables, not only towards us, but for a whole host of total debt, total amount owed by the Tamil Nadu government to various companies across the country is an amount of over 30,000 crores. So therefore, you would understand that we are also there in the queue, and we are mounting our efforts. Once the Union Cabinet approval happens and the amounts are transferred from the central pool to various governments, including the government of Tamil Nadu.
Okay. And so, in terms of restructuring, what exactly you all are working at? Because initially you all were looking at the sale of the company. So then later on, when there were no bidders, then you all looked at restructuring. So in terms of restructuring, if you can disclose that, what exactly we are looking at in terms of moratorium and interest payments.
Rajan.
As far as the restructuring, initially it's true, we had bid out our stake in the ITPCL, but we did not receive any bid. So at that stage, we realized that because basically the only possible entities which could have probably bought our stake in ITPCL were companies like NTPC or private lignite corporations. We engaged closely with both, but both for various reasons opted out, clearly indicating that they were not interested. Like then we worked with the Tamil Nadu government entity called TANGEDCO, and TANGEDCO also we tried to engage with them to buy out ITPCL. But for various reasons, because largely their financial constraints, they backed out. And that kept us with no other option but to try and restructure the debt in the entity. And that began the process with the Secretary MCA, the then Secretary MCA, convening a meeting of all the lenders to ITPCL. And in that meeting, he gave them deadlines to restructure the debt of the ITPCL. That process began almost 6 months ago, but it has taken long on account of various factors. I think, because of the large debt that had to be written off by the So there was a reluctance on the part of the lenders to the project because there was only that much debt which was sustainable, and the balance debt which was unsustainable was required to be serviced over the life of the concession. So there were a lot of negotiations over reaching an agreement. Now the agreement has been reached. What agreed upon. The other issues I have already flagged, that is the tangent code issues. There was also an issue of forensic audit that has also been completed. The creditors wanted a forensic audit. They commissioned an audit. That audit has also been completed. We commenced an audit that has also been completed. So therefore now all the data is there before them, and I think the next stage is the tangent code receivables, which will take us to the next level.
Sir, there are one or two questions that have come on chat, because I think there is a lot of background noise in case of some people who are working from home. So one of the question is, while the average group level recovery is about 55 to 60%, which are the industry business segments where loan recovery is extremely weak, sub 25%?
I think while Rajan and Vijay can give a more detailed answer, one of the areas where we found it extremely challenging to do recovery is in IFIN, and the loans given to some very large groups who themselves are in deep trouble. We have virtually got zero recoveries on some of those large loans. Some of them are in excess of 1,000 crores or higher, and the recovery ratio there is almost zero. And getting money, and many of these groups are also into IBC process themselves, and therefore we are at the mercy of the process as a lender from IFIN, which is the NBFC. And we actually, if you look at the IFIN book, and this goes back to pre-2018 October, it is very highly concentrated loans to a few large groups. Therefore, for a 16 or 18,000 crore balance sheet, if you look at it, the number of groups where the loans are in excess of 700 or 800 crores, which is more than 5% individually to some of the groups, or even 1,000 crores, is a very large part of the total lending book, in addition to lending to the group entities. And if you take out the group entities, the lending to some of these large groups is double-digit percentage of their loan book. And those IFIN loan recoveries actually are turning out to be one of the most difficult aspects because of the situation and the quality and the characteristic of the underlying borrowers, which we would have as the new board, we as a new board cannot understand the logic and the prudence why these loans were given in the first place.
So Rajan sir, would you like to add anything?
I think not really.
Okay. So next question is from Joel Ribello. Joel, go ahead.
Hello, can you hear me?
Yeah,
Yes.
Can you hear you, Joel?
Yeah, the target to recover loans by March 21 is quite, quite brave, I must say. I mean, what are the risks you foresee in achieving this target? My question is because we are in an unprecedented scenario, both economically as well as socially. We don't know. There's still a lot of uncertainty. So what are the risks that you foresee to achieve these targets?
I will again request Rajan, but before I request Rajan, I would like my senior colleague, Mr. Vinit Nair, to give his some sense about the challenges which we have facing, and how do you see it going forward, having considered that we have put out a reasonably bold target for the next 3 quarters. Vinit, to you, and then to Rajan.
Well, in many ways, the person who asked this question is right. I mean, we are in very uncharted territory, both economically and financially. 2, loans which were given with a certain amount of, I mean, there was hardly any due diligence. What drove them, we don't know. It is quite clear that they don't have the capacity now to pay. So, be it as it may, I do believe that we will have it is a very difficult task to be able to get even semblance of recovery from these groups. Nonetheless, we have been surprised that so far, whatever we have achieved, I do believe is relatively successful given the current macroeconomic situation. Because this has been not a double, this has been a triple whammy for all of us. bad lending, no follow-up, and an economic disaster all around. So, but frankly, I am surprised at the achievements we have had so far. And I'm quite sanguine that when the accounts are finally settled, our resolution and recovery the level.
Great, Vineet. And over to Rajan.
I would answer that question in the following ways. One, I think there is a risk that any bidder with whom which we are engaging and we have been engaging for long suddenly decides to walk out at some stage, as has happened in the case of the Italian bidder for one of the road projects, that is the Pune-Sholapur road project, where at a very late stage, he decided to withdraw for various reasons, because I think impacted by COVID. It was an Italian company which suddenly decided to withdraw.
Yes.
That is a contingency which cannot not be ruled out in other assets also. Number one. Number, for example, it could happen tomorrow if for whatever reasons, if this bid for the Chinese asset, in which the negotiations are in an advanced stage, but if we are not for any reason able to conclude, we are not being able to bring an agreement between the creditors, that is the Bank of Baroda, and the bidder, that is Ping An, and if for any reason if it falls through, that would have certainly affect us and impact us adversely. The second is the claims process. The claims process, we have to engage with various state governments and the NHAI, etc. Now, though there has been agreement on the amounts, but then again there are liquidity issues which are being faced by these organizations, particularly the state governments. For example, if you take the Gurgaon Metro, where we have we have an order from the High Court, and from the order of the High Court, the CAG has filed its report, and that report also, by and large, as per our understanding, validates our claims. But and I think now it is the court. It is back in the court of the High Court of Haryana, and we expect that going forward we may probably get a favorable order. But then the issue will arise is whether the government of Haryana would be in a position, in the current serious liquidity crisis that it is faced with, whether it would be able to honor the order of the High Court, or whether it would continue to challenge it, largely on account of the fact that it is unable to discharge its liability. Likewise, in the case of NHAI, there are claims where we have an order. The arbitrator has awarded an amount of 548 crores for one project in our favor. The NHAI has challenged it in the Delhi High Court. The single bench has again ordered it in our favor. The NHAI has challenged it in the division bench of the High Court, and where it is currently pending. So even if we get a division bench order in our favor, there is nothing to prevent the NHAI from going to the Supreme Court. So that this is a second possible reason. Third is that was mentioned initially, in real estate. There has been the real estate has been impacted adversely by COVID. I think we have seen that in some bids, not ours but other bids, there is a fall in the value of the bids by almost 25% post COVID. So therefore, in our bids, whether they are for residential properties or for commercial properties, in the coming months, therefore there is an expected erosion in the value of the bids from this. Then there are some in which I think there are some assets where I think we are going to be impacted on account of some of the transactions that were carried out in the time of the previous board. In some assets, those transactions are turning out to be dubious, and so those transactions are going to affect the transactions as we are going forward. The bidders are seeking the kind of clarity which we are currently not able to provide. The bids, some of the bidders may actually withdraw. So these are some of the risks we are trying to address, but we are hopeful that while this may impact us in some small way, and we have tried to factor in some of these risks before we have come out with these numbers.
So the risks are weighing on the side of delays. I mean, if we look at it on a balance right now, it's possible that timelines could be delayed because of the challenges that you'll face. Is that the right thing to say?
There could be some slippage in terms from one quarter, it could move to the next quarter. One, that is there.
Right.
And is in case any of the bidders withdraw, I mean, completely, that could certainly affect us. Because at this stage, we don't have a sense that any of them are going to withdraw. But that is something that could suddenly happen. As we told you, it abruptly happened in the case of the Italian bidder in the Pune-Sholapur road project.
Right. Having said that, Joel, I compliment the management and the board. This is what we want to strive for, and we will go for it. Therefore, I would at this stage like to believe that this is the game plan we have given, considering the risks to the best of our judgment. However, what events happen, they are not in our control, and therefore we are putting out transparently things as we see today and our reasonable estimate of how things look as we go forward. Therefore, I don't want you to carry an impression that we are being tentative about the roadmap we have put. We are committed to this roadmap, and we will go all out to, as IL&FS board and management, to make it happen. And if it happens, we will report to you appropriately. And if there is anything which has changed, we'll report to you. This is back to saying that irrespective of what the external environment is, we internally are doing our best and using our best judgment. And therefore, I don't want any impression that we are trying to hedge ourselves. I want, Joel, that to be important. And the board of IL&FS and the management of IL&FS at this stage is fully committed to this roadmap. And we will report. One of the other things I want to come back and share with you is the board and the management will put out this report every quarter.
Uday, can I add something?
Yes.
Don't underestimate. I mean, A, the conditions are terrible. Two, the economy is not great. But yet, we have done innovation wherever possible. And the classical example is what we have done for roads in InvIT. That's a huge resolution which has occurred, where value has been preserved. And it has largely been on our initiative that we chose that road. And Rajan was the real hero in this. We chose that road and was able to seek resolution where we would have otherwise been in serious trouble. So I believe we not only preserve value, I think in that we created value.
Right. Okay. Sharad, back to you.
Yeah, so there are one or two more questions now. So we just ending this, I think we'll take the last two questions. So we can have Advait can ask his question.
Yes, thanks a lot for your time. Just wanted to understand the situation in IFIN. What is the intra-group exposure? What is the exposure to third-party borrowers, whether you're saying the recovery is possibly better than to the group entities? And what is the IBC exposure for the company, for IFIN specifically in terms of the loans given out?
I think Kaushik Modak, the member of the operating committee, can you give this answer, please?
Yeah, hi, Advait. So roughly the IFIN exposure is about 50% internal and 50% external. So from a total asset book of about 18,000 gross numbers, it's roughly about 9 and a 9, yeah, which is external and internal, combining of loans and investments both. IBC, obviously, it's only for the external book of IFIN that is relevant, where we have filed several cases. As we speak, we have about 123 legal cases going on for recoveries of money, of which about IBC itself and through the NCLT is around 23 cases against various borrower groups and borrower entities and promoters.
Sir, there are one or two questions on the mail. So one is on this ITPCL. I think there is a question from Express saying that what action has been taken on the forensic finding of that. And secondly, there is one question which says that, which reads out that with the resolutions as planned by the new board, is there any point of recasting of the accounts of the group companies or pursuing the past and current management employed for IL&FS for mismanagement of fraud?
Yeah, maybe Vijay, you want to go for this?
You're on mute. Vijay, you're on mute. Vijay, you're on mute.
Yeah, I have been unmuted now. Yeah. Okay. So ITPCL forensic audit report has been obtained by IL&FS management and side by lenders group also. The consortium and lead bank has obtained a forensic audit report. They are not much different, but basic emphasis is on certain transactions which Mr. Rajan has already mentioned, that some objectionable transactions were there which have been flagged. Investigating agencies and RBI also, and that may be one of the reasons when somebody asks what are the risk perceptions. This is one of the things, but we are not unaware of it. We have factored all these parameters while putting a timeline. Yes, such and such clarifications, such and such clearances, regulatory, no objections, etc., are to be obtained. So some of them are in the nature of increase in cost of the project, etc. But we have no means of confirming it. Investigating agencies are doing it after forensic audit report has been shared with them, and we hope that the restructuring of ITPCL or sale of stakes in some of the foreign entities which are taking place and have seen such kind of transactions, that will take place without getting adversely affected from these transactions, because there is a proper disclosure and there is a proper cooperation with the investigating agency. This much I will like to share with you.
So I think so we have addressed all questions, I think. So we can wrap up now. Just if you could just give some closing remarks and then we can just.
Yeah, thank you very much. And I really appreciate the media joining on this update call arranged by IL&FS as a board and management. I would like, and of course, we are also represented by our advisors here who are also there on this call. What I would like to say is that we are fully committed to do everything we can from our point of view into continuing down the resolution path, despite all the challenges. And we would like to share with the media that we will come out with an update on the progress once a quarter after the quarter is over. Therefore, on the end of the September quarter, the IL&FS board and management will put out a update report sometime in October and thereafter every quarter, so that a full transparency, accountability, and also sharing whatever is happening within the group out in the public domain in the spirit of transparency and accountability is something we are deeply committed to. With that, I thank you all for being on this call and this meeting. And with that, I will request Sharad to bring this meeting to a close. Thank you very much.